although it could make sense to set up a retirement plan, it could get very expensive, right? So in order for the government to stimulate and to encourage small business owners to set up business retirement plans, they've created a tremendous number of tax credits and tax savings strategies that you can implement along with a business retirement plan that'll help offset a lot of the added costs that we've talked about here. So I'm going to jump into basically the tax savings and credits that are available. So any employer contribution that you put into an employee's retirement plan, that is not subject to payroll taxes. So if you give someone an extra $5,000 in the form of a retirement plan contribution, you're not paying payroll taxes on that contribution, and neither is the employee. Under an S Corp or a C Corporation, you're also saving on the 3.8% Medicare tax. So you're not paying Medicare tax on the contribution to the retirement plan, and you're also not paying Medicare tax on the withdrawal from that retirement plan. So that is another tremendous added saving there. So to use an example, let's say an employer makes a $200,000 contribution for themselves and their employees throughout the year. If that was instead paid as a wage or as a business profit to a Schedule C filer or a partnership, you would owe payroll taxes on that money. So a $200,000 retirement plan contribution comes to a $7,600 tax savings, and that's a permanent tax savings because when you pull that money out in your future retirement, you will not pay that 3.8% Medicare tax. So that alone usually is more than enough to offset any type of administration costs that you're going to incur by paying a pension plan actuary to implement a more sophisticated retirement plan. However, the story doesn't end there. So one of the major bills that President Biden passed into law as it relates to taxes was called Secure Act 2.0. That was passed December 29th, 2022, and it created a lot of expanded benefits under the tax law. So as far as those expanded benefits, one of them is that now employer plans are now going to have the ability to offer Roth contributions, which I talked about earlier. That allow both SEP plans and simple plans to allow for Roth contributions, both employee and employer. And that basically came into effect January 1st, 2023. So if any of you have a simple plan in your practice or even a SEP plan in your practice and you want to be able to put away Roth contributions, you should go back, talk to your advisor, talk to your plan sponsor, make sure that that provision is added and that you start making those type of deferrals. Again, could do it as early as the end of this year. Perfect. I'm going to skip over some of these slides just in an effort to save time. Perfect. So one major provision was that Roth contributions to plans, if your income is over $145,000, the extra catch-up contribution that you're allowed to make, which again for a simple plan is $3,500, for a 401k is $7,500, those are now required starting next year to be Roth contributions. I know it says there effective January 1st, 2024, but that has been kicked down that law has been kicked down the road 3 times already. So now effective January 1st of next year, if anyone's over 50 years old and making additional catch-up contributions, assuming you're making over $145,000, you want to make sure that those are being made as Roth contributions so you're complying with that new law. All right, so already talked about the fact that even now matching contributions, if you speak with your plan provider, you may be able to offer matching contributions on a Roth basis. Haven't actually seen any plans set up this way, but it is a new law effective January 1st, 2023. And the biggest incentives here to setting up a more sophisticated retirement plan is going to be the tax credits that are available to you. So I'm going to touch briefly on the three major tax credits, one of which is called the Employer Startup Pension Plan Startup Tax Credit. That's going to allow up to a $5,000 tax credit for the first 3 years you implement a new retirement plan. That could save you up to $15,000 in taxes over a 3-year period. The other major retirement plan credit is the Employer Contribution Tax Credit. That's up to a $1,000 tax credit per employee per year for the first 5 years you have a plan in place. So the first credit I already mentioned, that's up to $5,000 per year. This credit could be significantly higher because it's going to be basically up to $5,000 per employee over that 5-year period. So if you have 10 employees, it could be a very significant tax savings for doing this. The third and final credit, which is more overlooked, is called the auto enrollment tax credit. So if you add an auto enrollment feature to your retirement plan, your practice's retirement plan, you'll get up to a $500 credit for the first 3 years you do that.